There we go. All right. Good morning, everybody, and welcome to a strategy and finance meeting today. I'd just like to ask if there's any apologies to start with. Are we all here? I can't quite count us up. No apologies? Okay. And confirmation of the status of agenda, and I'd like that all reports be received. Can I have a mover and a seconder, please? Thank you, Councillor Sedgwick and Councillor Lynch. All in favour, please raise your hands. Thank you. Carried. Are there any disclosures of interest? Councillor Church.
Thank you, Madam Chair. So items 6.6 and 6.7, talking about the Wellbeing Trust and the statement of intent and the interim accounts. So I won't be voting on those.
Noted. Mary Ellen?
Yeah, I'm the same too.
Okay. Thanks very much. Nothing more?
Yeah, I'm same as well on Wellbeing Trust.
Thanks, Councillor Maguire. All right, that's noted. Now, a mover and a seconder for confirmation of the minutes for the 16th of February, please. Councillor Eyre and Councillor Lynch, all in favour, raise your arm. Thank you. Carried. Mary Ellen, did you want to say something, or your hand's still up? Okay, I don't think so. Okay. The action register. So that's on page 16. Are there any questions of staff on the action register at all? Or any comments? Councillor Sedgwick? No?
Yes, no, there was, thank you. It was in relation to the governance question results by ward. I don't recall having seen that. Have I missed it, or has it not yet been sent? Agenda item 6.6 under the actions register on page 16.
I can answer that.
Thank you.
For you, Madam Chair. Yep. My understanding was that Reece and was going to be working with Ashley on that. I think the date they have said end of March, which obviously is very imminent. It's either today or tomorrow. So I'll follow that up for you and see where those are at.
Thank you.
Councillor Patterson, is there anything to report on the cycleways and walkways re-NZTA? Oh, that is 6.6, note 3.
Councillor discuss recent survey results. Sorry, I was looking at the last one. Cycleways and walkways. No, I haven't had a chance to discuss with the NZTA there. RTC meetings coming up in a fortnight, which I'll be able to get some updates on that then. There was a few issues at the last RTC meeting, which actually took up some other time. So
yeah, no, understandable. Okay, we'll just leave that there on the register then. Is there anything else from anybody?
Just from me in relation to a discussion with Hamilton City re the Well Energy Trust. Yeah, yes. Look, we've had that discussion, and they'd actually investigated this issue a few years ago. Had a legal opinion on it, which basically said it was pretty watertight, and there was actually very little we could do about it. Yeah.
Tis what it is, right?
Unfortunately, it was set up and it is pretty watertight. So yeah, they were pretty keen. I think it was when Andrew King was in as mayor, he was pretty keen to pursue a change of the trust deed, and couldn't do it.
Okay. Thanks for that, Mary Ellen. Any questions of Mary Ellen on that? No? Okay, we'll move on then to page 19, and that is the draft annual plan consultation. Colin, are you presenting this? No?
I'll take that one, Madam Chair.
Okay, thank you. I'm just looking at the writing on who wrote the report, so I'm trying to work that out. Thanks, Melissa.
Thank you. Good morning, everyone. So as you may recall, there was a council workshop held on the 18th of February to present the proposed changes to be included in the annual plan for this coming financial year. And the purpose of this report is to confirm the outcomes discussed at that workshop. Noting that the most significant changes to the annual plan for 22-23 are to the roading budget, which are largely as a result of the changes to the Waka Kotahi subsidy. There have also been tweaks to budgets throughout the organisation, which have resulted in a $1.4 million deficit. And it's proposed that this deficit be funded through the Gearing for Growth and Greatness budget, and also through GARF, the General Accounting Reserve Fund. As a result, no changes to either the general rate or the targeted rate have been proposed from what was planned through year 2 of the long-term plan, and we are still on track for a 3.5% rate increase. Staff have assessed these proposed changes against the significance and engagement policy and have determined that the changes do not trigger the need for consultation. So on that basis, staff are seeking a recommendation to not consult on the 2022-23 annual plan, but we do acknowledge that we'll be doing some work to inform our communities, particularly around any rate or the rate increase and any significant projects.
Thanks, Melissa. Are there any questions at all from Councillor Lynch?
Thank you, Madam Chair. Why not about the report? It's an excellent report, and it did really well at confusing me, which isn't hard to do. So but why isn't the report writer's name on it?
It's at the back, Councillor Lynch. It's hard to find at the very end. And there's actually, I do note, Melissa, you are also part of that authoring this. It's Colin first, then you. But it's right at the end. And I think there's been a comment before from another peer about finding it.
You have questions.
Yeah.
Okay, is that the end of your questions, Councillor Lynch?
Yeah. Yes, thank you. Thank you.
Okay, Councillor Church.
Thank you, Madam Chair. Yeah, I think it was a great report, very thorough. I guess I would have preferred with the general accounting fund and more transparency around some of those numbers that were in there, but I'm happy to, with the grant changes, and so it doesn't seem very clear to me as to where the changes were, but I feel quite comfortable to not have to get any more detail at the moment. But I guess it's like, well, we're looking at 3.5% for the annual plan, but actually that's not the increases. So if we look at the attachment 3, the actual increases are going to be around between 6 and 7%, because once people include the targeted rate. So I think it's just being clear about, what's going to actually happen and the effects for our ratepayers when they get their bills. I was quite surprised at some of they're quite high, but I mean, a lot of it's around the targeted waters. I do also note in Appendix 3, which is on page 37, that the Pocono Hall, there's no targeted rate for the hall, but I think there is a targeted rate for the hall on your example. So that's missing, but I'm pretty sure it's around $25 that the residents pay, or $23. So perhaps someone to look into that. And the only other feedback I've got is, I know that it's good to really appreciate having the smaller communities examples. That was really helpful. But I guess the one that I noticed was the Port Waikato was missing, particularly as their targeted rate for their hall is $120, which significantly impacts, their rates, but when it comes in comparativeness. So perhaps an example of that might be helpful, just as a comparison. And I was also, offline, I'd appreciate, Colin, perhaps a bit more information just to understand the Whanga Coast and the Tioaki. Just those targeted rates seems community hall facilities at $1,260.09 and $630 for the targeted rate in hall seem high. So I just wanted to, perhaps if someone can unpack that for me later, and so I understand it, that would be great. That's it. Thank you.
Thank you. Colin, are you happy to leave that for later, or you want to make a comment?
Oh, no, I'll pick all those up with Councillor Church after the meeting. Thank you very much.
Thanks, Colin. Councillor Beck.
Yeah, thank you. Look, I appreciate that these reports are all, time bound. That they were accurate and the best to the best of our knowledge at the time of writing. And I'm just conscious that we've had an infrastructure meeting quite recently where we've talked about the further deferral of capital projects due to a whole lot of reasons that we discussed at that time. That surely would flow through as a material impact on deferred spend of capital, meaning deferred borrowings and other costs shifting around. So I guess between Alison and Colin, maybe some commentary about whether the assumptions of this workshop of 18th February, which is now actually 6 weeks ago, and wouldn't have taken this into account, has any impact on this. If anything, it should actually have a downwards pressure on a rate, the requirement for a rate rise. And it might seem like sort of small potatoes, I suppose, but as Councillor Church has pointed out, with an overall higher rate of increase when you take into account targeted rates for connected sewage and water connected properties, even to be able to go out with 3.25 or 3.3 is possibly still for some households material. Just wanting some commentary on that, if I may.
Thank you. Through you, Madam Chair. The assumption for the annual plan, which is still relevant, is that we assumed carry forwards of $50 million from this financial year to next year, and we've modelled the annual plan on that basis, and that's consistent with the figures that were given to the Infrastructure Committee earlier this week. So I think we got that assumption reasonably close as things stand at the moment. We will obviously keep monitoring that position going forward before we bring the annual plan to Council, to Strategy and Finance for recommendation, etc. As far as downward influence goes, I think we need to be aware that our rates, our growth is perhaps a little bit under pressure this year because things have slacked off a lot in terms of number of new properties, subdivisions, etc. A lot compared to last year, probably pretty much to the same levels as 1920. So we're now going through a sort of a regular 2-weekly modelling exercise to see what our general rate increases and what our volume increases are. Sorry, what our growth looks like compared to what we've got in the annual plan. So long story short, I think there's pressures both ways. We are deferring borrowings. We still have a high forecast, which Roger committed to the Infrastructure Committee of $100 million this year. That still has to be funded before we get into next year, and that's pretty much in line with what was assumed in the annual plan as well.
Thanks, Colin. Yeah. I thought maybe Alison, it might be best to go to Alison next.
I just wanted to support what Colin's just outlined, and we will require some additional detail from the infrastructure teams over the next couple of months to actually understand which projects and determine whether there's a supply chain issue, etc., and whether we need to make some assumptions around inflation differences. So that's probably the one piece and what we've assumed in the annual plan that we will need to potentially address depending on what the projects are.
Yeah, look, I'm happy with that answer, and I do appreciate that Mr. McCulloch has covered his booth in 3-leaf clovers and has crossed fingers and everything else because there is some good fortune and favourable winds required to get us to that 100 mil. And yet deferral is not our friend, actually, because of the escalation in prices you referred to, Alison, that are evident throughout any construction activity. So I guess the answer is swings and roundabouts, and it looks about right. Would that be a fair summary?
Yes.
Thank you.
Councillor Smith.
My question was of a similar vein to Councillor Beck. And just before I get into that, Councillor Lynch raised the issue of the date of the report and the authors, etc. At the end. I would certainly like to request that return to the front of the report, because it is a pain trying to work through how many pages you've got to go to find out who's written the report to send any query to. So if there's support around the table, I see a lot of councillors nodding, can we return that small bit of information to the top of the reports? So going back to the question that Councillor Beck raised, my concern is really going back to the issues I raised in infrastructure, in that whilst Roger has confirmed he will do his damnedest to get the 100 million spent as programmed, there's still that 50 million. And yeah, in the environment that we're in, whilst it's aspirational to continue with that 150 million program, noting that it was confirmed that we'd only ever done around 50 million previously, so that's an additional 200% or 100 million spending in this year. Going forward, I do not believe that this council will achieve that level of expenditure, and therefore we do not need the money that we have budgeted for. I think to bring in targeted rates in this discussion is irrelevant, with greatest respect to Councillor Church, because targeted rates are for a completely different issue, providing services to targeted residents. Whereas the general rate, if this is the issue that we are not going to be spending and we are not going to get to it, there needs to be some sort of reconciliation and rejig of the budgets to reflect that. So perhaps you answered the question, but I will be certainly looking for that information later as we come to finalise that annual plan, and do expect to be some reduction, even if it is small. And I'm very well aware of the issue of reducing rates, and those councils that went down to zero rates were foolish because of the problems they've had to try and bring back. But if we are not going to spend, then we are not entitled to take the money, in my view. So certainly be looking for that information in the next month or two. Thank you.
Thanks, Councillor Smith. Before I go to Councillor Sedgwick, I'll just ask Grace to take that item back to her team about the authors at the back. We as a council did approve that new format, so we're not blaming you, I guess, in using it. We've just found it needs to be maybe adjusted. So Mary Ellen can also consult with you if he thinks that's necessary. Thanks, Grace. Councillor Sedgwick.
Thank you very much. Look, this is minor in the whole scheme of things. I'm looking at page 37 on Appendix 3 and wondering why Pocono, have I missed something, but why Pocono has a charge for a community board. Is that just a mistake, perhaps, Alison, or is it something in the wrong line, or is it wishful thinking, or have I missed something?
Pocono is in the catchment area, if I may answer that one, is in the catchment area for the...
I think it's actually a line issue, because that also addresses the wastewater issue for Tiahaki and Whangakai. So we'll review that and come back to it.
Thank you very much. And I wish Mr. McCulloch all the best with his 4-leaf clovers. I'll give him another leaf on top of Councillor Beck's one. Thank you.
Mrs. Maxine Moana Tuwhangai.
Thank you, Madam Chair. Just a question. On page 21, it's all part of section 7. That's confirmation of statutory compliance. Under this section, the report considers impact on Māori. Why was that not applicable?
It was, we put that as not applicable because we'd have been through the workshop, and that's where we considered all the impacts, etc. This really is just a representation of all the workshop documents. So technically we could have put yes, it has been considered. So I apologise for that.
Because I was just thinking at the beginning of the meeting how there was that conversation around how the document had been considered by council in a previous meeting. I'm not in that meeting. So where does my voice get considered, especially when the intent was to have me on here as a voice of Māori? So it's probably too far down the track to stop the train, but if decisions like this are going to be made in the future, and you consider you need to have a role such as Māngai Māori on council, then I ask that I be included in those discussions. When there are workshops, I attend the workshops. I don't miss many of your workshops, but I'm not invited to every council meeting, and I shouldn't be. But when you are considering things to do with Māori, I think it would be prudent to invite me to those meetings. That's all.
Noted, Maxine, thank you. And also just a comment, I think Mr. Green is at the other committee meeting for infrastructure, but I'm not sure what meeting Colin's referring to there.
Yeah, so if I can, sorry, through you, Madam Chair, can I just clarify? It wasn't a meeting, so it was a workshop, and so you would have been invited. I'm not sure if you were in attendance or not, though, Mrs. Wana Tuwhangai. So, but yeah, it was not a meeting.
Okay, thank you, Alison. But the point noted, Maxine, thank you. And Mayor Allen.
Yeah, look, I just, normally in the chamber, I wouldn't raise this again because there's not usually anybody watching, but seeing we're streaming live, there probably is media along with ratepayers that could be watching this live stream, and a statement was made earlier on by Councillor Church and partly amended by Councillor Smith. I just want to make it very clear to anybody watching this that we are only looking at a 3.5% rate and general rate increase. Anything increases other and above that are for services provided through utilities. We operate both water and wastewater. So to actually lump them together like that, which only affect a marginal number of our population, is actually misleading. So I just want to be very, very clear that this only applies in the general rate component. I also receive part of those utility services through water, so I'll pay those increases, but I don't endure the cost of the wastewater. So to make a broad statement that we're looking at a 6% rate increase is absolutely misleading and correct. I just wanted that, considering we are live streaming, we need to be more accurate in actually how we report stuff.
Is there anything else, Mayor Allen?
No, that's it.
Okay, thank you. Councillor Eyre.
Thank you, Madam Chair. Look, by and large, great report. I do, however, in respect of the zone and village summaries, don't entirely find them particularly helpful, page 37, 38, because I wonder how real life they are. Can we actually buy a house in Huntly for 400,000? Can you buy a farm for 1.6 million? No. Do those figures need to be updated to actually reflect actually what is market value?
Those figures are consistent properties that we use year to year. I cannot vouch for that they are now indicative this time round of what's in that area. We can do some work on that and make sure that they are, Councillor, or otherwise, and update them if you, and you're right, yeah, it is worthwhile having a review of that. But there are actual properties in those areas.
But probably on the lower end, I would assume.
Maybe
not the average.
Yeah, look, we'll review that and have a look at them.
Thank you, much appreciated.
Mr. Iron.
Thanks, Madam Chair. So I think perhaps we're confusing rating value versus market value, and they may not be the same thing. Right, so what's happening is we're valuing that property for rating purposes based on what's happened. But yes, if you went and bought the same property on the open market, it might well be well above that rating value. So I think that's probably the distinction that's being referred to here. It's a genuine property regarded as a genuine middle of the range property within Huntly. That's right, isn't it, Colin?
That is correct.
Yeah.
Councillor Eyre, if you've got a rebuttal.
Yeah, can I just in respect of that, I struggle to, and I understand your point taken around market value, capital value, But even in respect of rural, I would be really, really surprised if you actually found a rural property valued at 1.6 million nowadays, and capital value. Correct me if I'm wrong, but it'd be great if it could be reviewed. Thank you.
Certainly.
Thank you. I'm sure the team will just look at that and check their accuracy. Councillor Church.
Thank you, Madam Chair. So just to confirm, I think we've got around 34,000 properties in the Waikato District Council. Is that around the right figure, Colin?
Yes. Rateable properties.
So, well, the targeted rate areas of the urban, how many of those are affected by the overall? Because my comments were around, it doesn't affect everybody, absolutely. But my overall was around those ones that do have targeted rates when they get their rates bill. So I'll reiterate it again. When they get their rates bill, it's not going to look at 3.5%. It's going to be higher because of those other rate increases, which a lot of them are around things like water. So how many of it, because the comments have been that it's only a few people, or so what's the percentage of people who have additional targeted rates over and above their halls?
It depends on the targeted rates, Councillor. I don't have those figures on the top of my head. I can estimate for you if you wish.
An estimate would be helpful.
That's fine. Water is around about 17,000, so roughly 50%. Wastewater is around about 12,000, so a third roughly. Refuse, which is on the smaller end of the targeted rate scale, and the increases is sorry, I don't have that figure. I don't have an idea of that figure.
Thank you. Yeah, it was just really highlighting my comments was around, so roughly 50% would be affected by any water's changes in their targeted rate, so that their overall bill, or when they get their rates bill, would be higher than that 3.5%. Yeah, so we know that it's been made up, but some people just look at the bill and say it's gone up so much. So that was my comments, wasn't actually to confuse people any further.
Oh, well, thanks for clearing that up, Councillor Church. Are there any other comments on this report at all? So if not, we have our recommendation on page 19 to confirm the council will not be consulting on the draft annual plan for 22-23 financial year. Are you moving that, Councillor Sedgwick? Yes, thank you. And seconded by Councillor Smith. All in favour, raise your hands. Against? Carried. Thanks, Colin and Melissa. Thanks very much. So moving on to page 57. Is that you now, Colin? Or is it going to be? It is. Okay. This is the valuation update. Thank you.
Thank you. I'll take the report as read. There's just a couple of items. One is I'd just like to summarise that we've finished the objections that came from the district valuation. The figures are as laid out in the report. We incurred as a result of that a loss of general rate revenue of $64,000, which is not a bad result, I think, given the level of increases in capital values that we were originally given. There is some concerns about the performance of the valuation service provider, which I've also covered in the report, and actions that we're taking to deal with that. There is an update in terms of our property values, which is linked to the district valuation, and it concerns licenses for gold kiwi fruit growers. The Valuer General gave the valuers across the whole country guidance to include the value of these licenses in the capital values of those properties that have that grow gold kiwi fruit. This was included in our valuation, as it was across the whole country. That guidance was challenged, has been challenged by a ratepayer in the Gisborne district. The court decision, High Court decision, was that is incorrect. That guidance. However, the Valuer General has given notice to appeal the decision. The impact it could have on our district is that we have 23 properties valued at around $79 million currently. Our generate impact, if is an estimate, and it's my estimate, it's not the valuer's estimate, is that if we were to exclude if the valuers have to exclude the value of the gold kiwi fruit licenses, the impact could be between, I would say, zero because of, and $75,000. So in terms of general rate revenue per year, we have 23 properties. Interestingly, a couple of days ago, there was an article in the NZ Herald about properties being sold with gold kiwi fruit licenses being sold for roughly, well, between $1.5 and $2 million per hectare, which is way above our capital values that we have recorded for those 23 properties. So that's the sort of breaking news on that report. I'll take questions now.
Does not appear, Colin, that there are any. It's very well explained.
Just one, sorry, I couldn't find my hand. Yeah, look, it doesn't really matter in relation to valuations. I think Gavin touched on it before in his comment. You know, there's valuations for the purpose of rating. So it wouldn't matter whether it was $1 or $10. It's that's your base you use to set a rating, cents in the dollar. So I think everybody gets caught up on what we call more commonly known in the region as GVs or government valuations. They are solely for the purpose of rating. They are not a market valuation. And we all know, and I've said this for years, and most of our valuations are outdated before they're even posted because of the time that's lost between when they're set and when we utilise them. But that also is irrelevant. It's there to give us a figure to actually rate against in the cents in the dollar. And so having a true value of what a property might be today compared to what it was 2 days ago or 3 days in advance doesn't matter anymore.
Thanks, Mary Ellen. Councillor Patterson.
Yeah, thank you, Chair. Yeah, Colin, just on page 57, the bottom paragraph, when you're talking about the valuation service provider and the BDC likely to go forward to the market. Could you just explain to me a little bit around that? Are we due to, is our contract expired now? Because then it does say, noted that the current contract with Kiwi is very advantageous for us.
Okay, yes, the contract expires on the 3rd of June this year, 2022. The current contract is a very good contract in that we currently pay a fixed amount per month, which is not unusual. Most councils pay on a per transaction basis or per valuation or on an activity basis. And given the growth that we've had over the last few years, with this contract's been in place 6 years, I think council's done very well by having a fixed price contract.
Right.
I don't think QV has made any money out of us. And that may be one of the reasons why we had poor service, but that's conjecture. So when we go to the market, I'm flagging, which we're likely to do. I'm flagging that two things. One is there's little competition in the market for because the organisations aren't of the scale that can provide the service we need. And two, we're unlikely to get it at such advantageous rates or advantageous cost going forward.
Right.
Thank you.
So that possible extra cost would be factored in, but that wouldn't affect this annual plan anyway, wouldn't it?
It will affect the annual plan, but we've allowed for that. We've made provision for about a 10% increase in the valuation costs.
Okay, thank you.
Thank you. Councillor Smith.
Thank you. Probably not something for right now, but I just think it's something for us to consider long term or a future council long term, is that if you've got these, I think it was 23 properties, Colin, in this boat, these kiwi fruit orchards, and at this incredibly high value per hectare, there is the opportunity for councils to introduce a differential rating on that type of unique situation compared to others. So I would just raise it and leave it there for a future discussion rather than today. Thank you.
Thank you.
Councillor Church.
Thank you, Madam Chair. Just a couple of quick things. I know we did our evaluations late. Are we going to be going back? Because I know that also was quite difficult for council, for everyone, including our ratepayers. So will we be going back to the normal dating process? What's the likelihood of that?
We will be. I checked that with the Valuer General a few months ago, and he does require us to do it from the next valuation will be as at 1st July 2023. So next year, after rate strike, we'll be back into valuations, district valuation again.
And just lastly, Madam Chair, I was quite interested that there seemed to be quite an increase in the people who wanted a CV reduction in their rates. And so my question is, when they got the answer after their properties were re-looked at, was there anyone that wanted to go through maybe an appeal process against their decision if they weren't lowered, for example?
The valuers are obliged to discuss the revised valuation with the ratepayer, with the owners, before they issue it to us. There is only one objection, which is going to the Land Valuation Tribunal that I'm aware of, and that started a good few months ago. It's not a result of a revaluation. It's just the guy just didn't want to listen to what the valuer was saying, so he's gone to the Land Valuation Tribunal, and Kiwi are running that process on our behalf, which is legally acceptable, and our legal team is keeping a watching brief on that.
Great, thank you very much.
Thank you, Colin. Very well explained. And I believe you've got the next report, the approved counterparty review. Straightforward. Yes.
Thank you.
Madam Chair, I just wonder, we've actually had an external party join our meeting who's come to present on behalf of the Waikato Regional Airport Limited.
Yes.
I wonder if we would be able to reorder the papers accordingly.
I don't see why not. Has anybody on the meeting got an objection to that? No. Okay, well, thank you. Well, Colin, we'll put you on hold and we'll go to Alison, and that's, which report is that on? Let me just see.
So we've got more than one report. We've got the interim accounts, so that's the half-yearly accounts of our CCOs, of which Waikato Regional Airport Limited is one of our CCOs.
Yes.
And we've also got the draft statement of intent before the
committee. Okay, page 113, we'll go to that first, the draft statement of intent, and we'll just do you propose to just do the regional airport?
Yeah, so I believe we've got, I believe we've got Mark,
Morgan
on the call, as well as Scott Kendall.
Okay. All right, well, we'll go to page 113 first, Alison, if you'd like to introduce it. Or what do you want to do there?
Sorry, I'm just trying to navigate my agenda on my iPad. Please hold.
Now, everybody else, you're on page 113.
So largely going to take the report as read. So councillors will be aware, or the community will be aware, that a draft statement of intent is issued around the 1st of March every year for the shareholders to review and determine whether there's anything that they would like the board to revisit. Obviously, we don't set the strategic direction necessarily of the CCOs where we haven't got the majority shareholding, but this is the opportunity to engage with the CCO and ask any questions that you may have. So I suggest that we invite Mark to talk to you about the statement of intent.
Welcome, Mark. Is it Scott we're talking to?
Yeah, good morning, everyone. So I am here, Scott Kendall, the Finance and Commercial Manager. Look, Mark is endeavouring to get on the call. He's having some technology challenges. So it may be that unfortunately you're stuck with me, but the good news is, having not prepared to speak to Mark's slides, I'll get through them a lot quicker than potentially Mark would. So yeah, so I guess it's a thanks for having us sort of introduction. So appreciate it. It's the first time I've met many of you in my 3 years at the airport. So pleased to have the opportunity to present more widely than perhaps we have in the past. And yeah, this is a hybrid presentation, so it talks about the 6 months it's been, so that it will speak to the report that you've received there, and looking forward into the future with our statement of intent. So I do have a presentation which hopefully is sharing on screen and you can see that, and I will move through fairly quickly, conscious you've got a full agenda. So I'll just try and move us through to the next slide. Yeah, so yeah, the first 6 months in review we've had, July to December was I wouldn't say a game of two halves, it was an interesting sort of a financial year. So we started with really strong domestic tourism, of course, with borders closed. We actually had a record July, so our July passenger numbers for 2021 surpassed what we did when we were a combined international and domestic airport sort of a decade ago. We obviously had the for much of it dominated, of course, by the Delta outbreak and level 3 restrictions from August through really till early December or late November. And then in December and also January 22, we had more record months. So very much some really highs and lows, but hopefully looking forward, we'd think the worst of travel disruptions behind us. And I'll talk a little more how Omicron's affected us in the second half of the year. Of course, a big piece of work for us has been the Terminal Resilience Project. So you may recall a few years ago, we discovered, although the terminal had been renovated not that long ago, it was renovated to the building code of the day. Obviously, post Christchurch earthquake, a lot of structural changes and that in design and building had to change. So we were set about bringing the building not only up to code, but also future-proofing and expecting future building code changes and acknowledging it as a public place, and also Air New Zealand's requirements, which are more stringent than those of the building code. So that was a significant piece of work that was originally paused in 2020. That commenced and was able largely through the Delta lockdowns to continue. And that was actually in some respects not a bad thing, because it meant we're able to do a lot of work without disruption to the public, being very few public travelling. So that was that sort of stage one was completed. And if you haven't been to the airport lately, we're actually operating out of what was the international terminal. So we've sort of completely reversed ends of the terminal. And we're trading out of the international end of the terminal with all the same public services we had before. There's still cafe, there's still Air New Zealand regional lounge, all that's happening. And I do say on the slide there, on time and budget. The good news is we're on budget still. Timing, like that may slip slightly into October, obviously. Omicron impacting workforce. Really lucky so far with supply chain. With a lot of forward ordering and deposits to keep the supply chain out. It's just some workforce disruption, which we're all obviously encountering at the moment. And Northern Precinct is something you would have been consulted over late last year or early this year around the farm the airport bought a number of years ago. And it's that sort of future-proofing our property strategy. So there's 100 hectares of land that opens up for commercial use, of which 20 hectares at least is airside land that the airport company will keep. So that 20 hectares, to put some context to that, is as much land, again, that the airport already has reserved north of the terminal, based on the 2011 strategy around a long runway and wide body capability. So more capability again being preserved here. And Northern Precinct, of course, it's really the future to respond to growth sort of in that growth south to south of Hamilton City and Southern Links one day. So that significant amount of planning has gone in there, and of course through Waipa being the relevant territorial authority, a plan change process to work through over the next year. I'm looking just now sort of the forward lens, looking for the next sort of 6 months. Omicron we've seen pretty quickly after the country moved to the red alert level, a 40% drop in passenger traffic. That's been pretty sustained for the past couple of months, but we're told April is looking really good for New Zealand. So they're saying they're kind of within 10% of last year's forward bookings. So expecting with all those short weeks, long weekends, school holidays. And look, I think we're accepting the peaks largely behind us and events and that and able to go ahead. We're expecting a strong bounce back in April. And look, we will anticipate some disruption for the rest of the year, but probably a lot better than a blanket 40% drop. In terms of Omicron and business continuity, particularly around our rescue fire response, is really important. So we've done a lot of modelling there around what sort of workforce loss we could sustain. We've actually been really lucky so far over the past sort of 6 weeks, and and expect again with the worst behind us hopefully, but we could lose 70% of the workforce and we can cover the critical scheduled flight services and still meet all the regulatory obligations for that. As I say, lucky to date with we haven't really been in any compromised situations like that. And same air traffic control, which is not something provided by the airport, but they have similar plans and similar kind of scenarios, a high level of redundancy in the workforce to cover the scheduled flights, which are of course the priority for having air traffic control and rescue fire services. Hotel, the MIQ facility, so the Distinction Hotel in Te Rapa in Hamilton had been the call it community-based facility, and our airport hotel had been receiving border arrivals. They were switched early in February. So while there's been obviously a lot of media coverage around MIQ hotels returning to the market, our hotel remains a community facility. So this is for people who have COVID. They maybe have underlying health conditions, or they're in a household where they can't safely isolate without risking family members. So they can come to our hotel through local iwi, through Ministry of Health, and they can recover there and isolate there. So we're still providing an MIQ facility, but not for border arrivals. And we will run as a facility through to 30 June. So that's a little bit more certainty of income and I guess timing and readiness to return to the market probably a bit more of a timeline than some other hotels have had and we're expecting to have. And just around organisation of people, we do have a few personnel changes. So some of them, I guess, reflect the growth and diversity of the organisation. So with property expanding, we're bringing on a new general manager of property. That role's currently been recruited. And our airport general manager, Simon Hollinger, is actually leaving the business this week. So he's been with us 23 years. At various times has been chief executive. So a lot of history and IP with Simon, but also I guess we've grown the organisation, developed people around it. That continuity and that IP is there. And we are, and I'll talk more with sustainability in a slide or two, we are, some of these things around wellbeing and engagement and sustainability, we're actually starting to walk our talk now. It's not just a sentence you read in SOI, so I'll give you a heads up on that as well. Just this graph here, and I won't dwell too long on this. This is sort of recent history, the current year, and looking a little bit into the future. The blue, I guess, bar is really the aeronautical earnings. So if we go from 2018 and go back a decade to the international era, the blue bar sat below the line. So the aeronautical business lost a small amount of money for a number of years. It was around 2018, it returned to a profit. As you see, we've come into 2020, 21, 22. That's 75% sort of pink number. That's the impact of COVID. So we lost 25% of our business in 2020 with COVID. But you can see there the aeronautical business through COVID has been more profitable than it was some years pre-COVID. So I guess that reflects the strength of having the balance sheet in order and having passenger growth, which has been pretty sustained for a few years now. As you can see, the green bars with property. So this is our recurring property income. That's from our leasing, our hotel, and our farming ventures. This isn't land sales. So obviously, land sales have been a reasonably short-term strategy around releasing some capital that we can reinvest in the aeronautical business, reinvest in sustainable income-generating assets. So that green there is not land sales. That's our other property ventures. And of course, the last 2 years have been dominated with the MIQ contract from the Crown. So we will get a trading hotel back, and of course next year. That will take a little while to rebuild. I guess opening the doors on day one, it's a little bit like that when we bought it. But you can see their earnings reasonably steady. And obviously we went into the strategy for diversification to protect volatility in the aviation industry. And I think the aviation business stood up really well, but equally group earnings have stood up. So I think that's been we weren't intending to have this as a test of our strategy so early on, but I think it stood up really well. And just to our last slide, so looking ahead with the statement of intent and beyond, quite exciting for us is a couple of pieces of aeronautical development. So a lot of recent aeronautical development has been predicated around the airline business. For the first time in over a decade, we are investing in the GA, General Aviation part of the business. So that's everything that isn't airlines. We've actually had on Titanium Park, land that borders the airport has been acquired by a couple of individuals who own corporate jets or looking to buy corporate jets and relocate out of Auckland. So that's quite exciting. It's a new part of the market Hamilton hasn't really captured in the past. So quite exciting that we can have a property part of our business and the aeronautical part of our business integrating at last. So that is quite significant for us, and it's a new part of the market, which of course that general aviation sector for us has been quite significantly hampered with the loss of L3. Regionally, of course, that took 300 international students out of the economy, cost 200 jobs. And actually the financial impact of the airport was much less severe. So it is more what that did for the region, but exciting to see some shoots of new types of aviation come to the community. Runway designation renewal. So we do have land protected to the north of the airport. We can extend the runway by almost another kilometre. That designation expires in 2026. Now, for us, there's a little bit of research to do before that. Obviously, conscious and certainly in the southern part of your region is growing as well, and what that might mean for how the airport interacts with suburbs like Tamahere. But we are doing a bit of research at the moment because originally the airport was protected land for a 3-kilometre runway that could do wide-body, long-haul jets into Asia or North America. COVID has taught us that Boeing 747s and Airbus A380s have been quickly retired and moving to sort of smaller planes. So it may be that our current runway or a smaller extension can still achieve those long-term aspirations of being able to connect direct to Asia and North America. But with new aircraft technology, we can do that off a shorter runway. So a lot of work behind the scenes to understand what the future of aviation is and what our future is. Ultimately, we'd still like to achieve the same outcome, and we can probably do that without needing to build a 3-kilometre runway. Obviously, the longer the runway, the more it costs. So understanding our legal position around the designation process, and also what are we actually fighting for here. So I think that will continue over the next 2 or 3 years, but very much if the opportunity, it's something that the airport has, it's something we're keen to hold on to, where of course it's sensible to do so. Sustainability, as I mentioned, something we're starting to walk the talk. So we are very advanced in a business case around solar energy on site. We do have a lot of surplus land that isn't suitable either for the airport or the business park, but is well positioned to take a solar farm. And we are doing, say, well advanced. That would meet 50% of our energy needs fairly quickly. And in the not too distant future, you could do something like solar panels over part of the car park. So you get a covered car park or part of a covered car park, and then we're meeting all of our energy needs on site. So that quite significant wins we can do there. Pretty and reasonably low cost. We're also in a global airport accreditation scheme called ACA. So there's only a handful of New Zealand airports on the ladder where we've got level 1 and we're working towards level 2. I mean, there's 4 levels. Christchurch has got level 4, but it's very much a pyramid scheme. So very few get to level 4, and indeed very few have actually got to level 1. So that's just around understanding and monitoring our emissions and where possible trying to reduce them, which is obviously not a lot different from the climate change reporting standards which are coming our way. And as I sort of said, the future really for us is around Northern Precinct, and I've spoken about Central Precinct, with that being the property development that's going to have commercial property sale, but also the aeronautical interface. So I think that's a bit of an express read of sort of how the airport's responded to COVID, where we are at the moment, and sort of where we're heading in the short term. So that was the sort of planned presentation. So I'm happy to open up. If anyone has any questions, I'll do my best to answer in Mark's absence.
Well, thank you, Scott. If you take your screen down, it'd be helpful.
Yeah, I'm just, there we are. It should be.
Yes, it's perfect. Thanks very much. Any questions from any councillors to Scott? Very comprehensive, I must say.
Thanks, Janet.
Yeah, it doesn't look like there are any questions. It's exciting by the look of it, Scott. So thank you so much for coming along, and sorry we couldn't meet Mark.
That's no problem. Well, hopefully next time we meet, you'll be able to meet us in 3 dimensions. So
good.
Yeah, look forward to that. But no, thank you for having us. It was good to connect with a lot more of your audience for the first time. So.
Oh, thank you very much for coming.
No worries. All right.
Bye. So we'll continue with this report so that we don't jump around. So there are there's the Wellbeing Trust and the LES as well. So have we got any questions from anybody about the other 2 statements of intent? No? If not, page 114, there is a recommendation to receive these and to request the Chief Financial Officer delivers any feedback, which obviously there hasn't been. And that's required by the 30th of April. So can I have a mover and a seconder for that? Thank you. Councillor Lynch and Councillor Sedgwick, all in favour, raise your hands.
I thought we'd already received all the reports, Madam Chair.
No, this has got we have received them. This is a recommendation.
Yeah, recommend to receive them.
No, and request that the Chief Financial Officer notes feedback, and just carrying on with the rest of the recommendation.
So I'm not going to argue with it, but it seems.
No, well, you are arguing, but we'll move on. So all in favour? Did we do that? Against? Carried. Thank you. The next report is 166, which is in the same topic, and then we'll go back to Colin after that. So the interim accounts. So we have, this is a report that is just being received. So these are there are 6 attachments. Are there any questions of Alison or Colin on this? Okay, thank you. Thanks, Alison. So if we can move back to approved counterparties, page 60. Thank you. And Colin, back to you.
Thank you. Thank you, Madam Chair. This is a routine report that comes to you every quarter. There's nothing changed in this from the last quarter, other than the date at which the Reserve Bank had published the ratings, that they're all the same. I'll take questions if there are any.
Doesn't appear so. Thanks, Colin. The next report, I think, where are we at for the next report? Oh, LGFA draft statement of intent. Is that you, Alison?
Yes, it is, Madam Chair. Happy to take the report as read. The attached cover letter from the LGFA presents some of their highlights. Oh, their draft statement of intent. The next one's the one on highlights.
Councillor Church.
Thank you, Madam Chair. I assume it's low, but I just wanted to get a bit of a framework on it. So on the bottom of page 62, it talks about the LGFA, including operational costs and liquidity, interest rates, and how they're managing the risk. Okay, and I mean, it's a really nice statement, but it doesn't feel like it's got very much content in how they're minimizing risks. So I assume that the risk to us is very low, but can you frame up kind of what risks that we do have and what that could be in terms of financial extent?
Through you, Madam Chair. So when we sign up as a guaranteeing local authority, that means that if for some reason the LGFA had to default, or one of the councils had to default, and so that put the LGFA in a position where you would finding difficulty repaying the bonds, then the councils would have to temporarily fund that. It's extremely unlikely to happen. I can't recall, I would need to get some up-to-date numbers, but when we first signed up, I think the exposure, if it were to happen, was our contribution would be around 70,000. That will have grown over time, but I'd need to actually go away and have a look at what the exposure actually is. But it's a short-term issue. It would be resolved and then we would be repaid.
Right, thank you.
And the shareholders would have to come to the party before the rest of us.
Great. I know it's a really minimal risk, and if it's really low like that, even if years later, I'm comfortable with that. I guess I was segueing that with the point that was on page 64 around that in the 3 years, estimated 5.3 billion of our bonds and loans and loans, 5.7 billion will mature at once. Yeah, so I was really segueing it into that sort of like year 3 gap.
Okay, I think Alison's answered that well. So, Councillor Beck.
Yeah, thank you. And I apologise in advance, Alison. I'm going to take the opportunity to flog a long deceased equine, if I may. I still feel that being guarantor without being a shareholder is having all of the downside and none of the upside. I know it's kind of theoretical in this point, but again, I encourage us to look for opportunities, as in fact they are now including new councils. I think we had a discussion about that some months ago, just to revisit that. You know, if we're going to be joint and several, we might as well be a shareholder.
Yes, your comment is noted, Councillor Beck, and probably just to, I understand that the capital cost to buy in is a couple of $100,000 to actually take up that shareholding, and the benefits I'm not sure what the dividend payouts, etc., are at the moment. But of course, there is that increased exposure in terms of if there was any default. But we will ask the question in terms of what that does look like for council.
Thank you, Alison. Now, on page 62, there is a recommendation that after the fact we've received the report, we actually have to say it's subject to the adjustment based on shareholder feedback, which I don't think there's any adjustments, but the comments were noted. Can I have a mover and a seconder, please? Councillor Thompson, Councillor Eyre, all in favour? Against? Carried. Thank you. So the next one is the half-yearly report for LGFAs. Alison, that's you again.
So thank you, Madam Chair. So this is the where we've got the attachment of the highlights of the last 6 months. So if you have any questions, please let me know and I will funnel them through to Mr. Butcher.
Any questions? No. Okay, thanks, Alison. Now we've done the next two. So we're on to 6.8 Raglan Holiday Park. Now, Roger, are you speaking to this or is it someone else?
Councillor Thompson is the chair of the board, okay. So I think she may like to present that one.
Thank you, Councillor Thompson.
Thank you, Madam Chair. As you can see by the financial report, it's been an interesting year. I think, listening to, the impact of COVID across our business, and certainly the camp hasn't been excluded from that. But in saying that, still doing really well. We're lucky that we've had, prudent management by our accountant, and with her historical knowledge of the business of the camp, has taken us through the challenging waters that we find ourselves. And also with the new manager, Leanne, she's done a great job in her time. She's been in that role for less than a year. Coming up in June, I think, will be a year for her. And, she's faced a lot of things, including, the vaccination requirements through staff, which have added to, some of the costs moving forward over that time. But I think we've done really well. And of course, managing to maintain our capital works program and doing adjustments to that. And I think, from the position of the board itself, I think has been operating really well over the last year. So that's all I've really got to say to that. And I think that the financial report speaks for itself. And Roger, if you've got anything you would like to add to that.
Yeah, thank you for that, Councillor Thompson. Just want to endorse that the board is working very effectively at the moment. We have a very competent camp manager in place, and Sam Baker is managing the camp manager. One of our challenges historically has been, do we operate the camp as a separate entity or as part of council? So for the last 18 months, 2 years, we've been actively bringing the camp operations in line with council business, and that seems to be really working well. And the board is overseeing the governance of the camp in an extremely good way at the moment. So I think the camp is in safe hands, and we're doing well. But happy for any questions.
Thanks, Roger, and thanks, Councillor Thompson. Councillor Church.
Thank you, Madam Chair. Yeah, you can see I actually enjoyed reading these financials. It showed to me my limited financial understanding of these things. Really good work by the board in reducing some costs and looking into things. My question, two of them, I guess, is right. You talked about rates and you talked about the closeness to council, but that's one of the things that actually did increase. I noticed there was a lot of decreases in costs, and obviously there's tightening about with the lower revenues and things, which is applaudable. But the rates have gone up 50%. In my calculation, so 21,888 to 33,700 is quite a significant. And for a business where you've got that's working hard on that, it seems like a large increase. Is there any commentary around that?
Where are you looking, Councillor Church?
On page 213.
Can I, sorry, through you, Madam Chair, that is correct. The rates have increased substantially. That is related to the change in valuation. So in addition to having, of course, they will have the higher wastewater and water charges that will exceed that of a residential home. They have also been subject to quite a change in their valuation.
Yeah, it's well over 50%, right? 12,000 over 21, or 11,000. And so, is there any way that that can be mitigated? Because in terms of council,
it's deemed to be a commercial activity. So if I'm not sure what grounds you would have to mitigate it for the campground, as opposed to other organisations that are set up in our district.
Okay, fair enough.
If I can just add to that, the board did note that significant increase that Councillor Church has just identified at the time, and they did query it. And so we had a good look at that and explained to the board how it all bolts together. But the explanation Alison's given is correct. It is a commercial venture, and that's why it gets rated at that amount.
Right. And my last little question was, have you increased your board? It's just because it seems to be there's some really good financial work done in terms of reducing a lot of costs through those years, but that one went up, which is board expenses. So maybe you got extra board members.
No, there's not extra board members. It's the same as it always has been.
Okay. Right. No, great.
Thank you. Councillor Beck.
Yeah, just a couple of questions from me. I note on page 218 that financial assets are held at cost, which sort of slightly surprised me. Financial assets, is that just like regular assets, or is that financial assets is like something different, like cash deposits or advanced booking fees or something?
I'm not actually sure of the answer to that question. Alison, do you have any ideas what that might be referring to?
Might need to repeat the question for me, Councillor Beck. What line is it?
218 below it's in commentary, 218 below the table, financial instruments.
I think through you, Madam Chair, so it will be things like term deposits.
In fact, that will be exactly what it is. They do have a term deposit that they have to fund future capital program.
Yep, no, that's fine. It would be an unusual way to treat general assets, but financial assets is obviously different. Secondly, question for Lisa. In terms of work around sustainability, perhaps in cooperation, listen to the airport, for example, getting a covered car park, which is cunningly disguised as a solar farm. Very clever. I hadn't thought about that. Are there any initiatives planned in the immediate future thinking about better treatment of waste, recycling of solid waste for campers, camp users, energy generation, anything like that? Electric vehicles getting around the park for staff?
Yeah, well, through our strategic planning, we've actually touched on that, in particular about climate mitigation, because looking at those aspects, investigating, the possibility of solar or whatever that might be, but also just where we're placed, being right on the coast and looking at
even the coastal erosion that has been quite significant over the last 5 years. So we really have to put, in fact, on our next board meeting, at the top of priority for our agenda is actually looking at the erosion and climate mitigation. Just recently, we undertook a waste audit with Extreme Zero Waste. Obviously, we wanted to do it in a really busy time, but with the impacts of COVID and numbers in the park. So we're looking at how we can serve the park better with our waste, particularly around food waste. But I think that will be a piece of work that the board will need to look at, moving forward, particularly about energy. We've been looking at how we can manage our hot water and so forth better. So it's actually not a simple one size fits all, and it is actually will take us quite a bit of work to do better at what we're actually doing. Given that over a busy month, we can have up to 5,500 people come through the camp. So it's actually quite a big business, and certainly that's on the agenda for the board to put our thoughts on. And, with Rachel, in that climate space, that'll be really helpful moving forward, having her on board to help us do that.
Yeah. Any low-hanging fruit in regards to, for example, I think there was a large amount of LPG actually gets used at the camp, enough that we've got our own little tank there, mini kind of bulk storage. Any low-hanging fruit there?
That's a really good question, Roger. We have looked at that, because we've got the guys in to actually look at what would work best. And we haven't landed on what quite that would be moving forward.
Yeah, so if I can just add to that, the main use for gas at the camp is for heating water. There is plans to try and reduce gas use. We, in fact, went through a replacement of one gas boiler to, it was a heat pump system, so that's changing to electricity. And that actually didn't work out as well as we had liked. There was a whole range of issues that it took us probably 6-9 months to work out what was going wrong to meet demand. It's a very peaky demand kind of a situation. That's why gas is an appropriate energy source for certain times. So what we're looking at doing is dealing with the base load through heat pumps, but then at the extreme load times with gas. So I think there will always be a hybrid solution there until the technology catches up. But we're definitely talking to Martin Lynch, our energy efficiency advisor, on what is out there, what are the options, and how do we move forward quicker to meet some of our climate obligations.
Thank you.
Thank you, Mrs. Moana Tufangai.
Thank you. Well, congratulations on ending up where you did, especially for a service that relies on people holidaying predominantly. So congratulations on that. My question is with regard to the annual caravan leases. So did the number of sites increase, or has the annual lease cost to the tenants increased? Did you put up the leases, or have you got more sites?
We actually put up the leases. They were due for a review, and we'll probably be looking at that again at some stage.
Okay, thank you.
Thank you. Good report. Thank you, Councillor Thompson and Roger. So it was to be received, which we've done. So we'll move on now to page 222, which is Hamilton and Waikato tourism. And we have a guest here, Nicola Greenwell. Welcome, Nicola. Oh, there you are.
I'm here.
Right. Nice to have you. Sorry you had to wait. So would you like to give us an overview of your report?
Thank you. Of course I would. Tēnā koutou, tēnā koutou, tēnā koutou katoa. Ko Nicola Greenwell, toko ingoa. Gives me great pleasure to be with you today as the Interim General Manager of Hamilton Waikato Tourism, after we farewelled Jason in the beginning of February, end of January. So this is our 6-month report from July to December last year, 2021. Seems a little while ago, but I understand you've got the full report, 15 odd pages of commentary in your agenda pack. So I've got a wee presentation just to keep me on track and to share a few of our stats of where we're at. Bear with me, technology. So what I thought we would do first is just remind ourselves of what the last 6 months looked like of 2021. Technology will work with me. Because often we forget, we move on to how we are now and how we're living life, and we often sort of glaze over the fact that actually of the 6 months that we're reporting on, only 1 month of that was really quite free and easy in life and people could move around. July, we were relatively normal, we were living life, we were having a good old time, and then Delta arrived in the community, so that meant August, we went into a national level 4 lockdown, and that was up and down the country. In September, Auckland remained at level 4. Waikato, we went down to level 3. Then we went into a new level 2 that was stylised for Delta. That gave us just a little taste of some freedom for 3 little wee weeks. And then we were lunged back into level 3. So that was part of the Waikato region, including your district. And then, of course, that it got extended down into our Watomo area as well. That extended through October and November. And in December, we still didn't have our Auckland people back until around that 15th of December, they were allowed to travel. There is absolutely no doubt in anyone's mind, and we could see it on the streets, and we'll see it in the numbers in just a minute, that having our domestic market, our locals at home, our Aucklanders at home, that has absolutely impacted on our visitation, our bed nights, our visitor spend. It's been dire impact on tourism, events, and hospitality. And obviously the red setting that we currently have, you know, that continues, but that'll come through in our next 6-month report. Key highlights, these are in your pack, and this screen is actually for the Waikato region, which of course is wider than the district footprint. This is where we work. So our visitor spend is now actually captured by MB as tourism electronic card transactions. So that is slightly different to the numbers that you would have been used to have been receiving over the years when MB used to make an estimate for online spend and cash contribution from the visitor sector. This is purely electronic card. So when we swipe the old Visa at point of sale, that's what this captures. So slightly different numbers. But they have provided backdated numbers to 2019 so that we do have comparative data. So as a region, 662 million contribution. We've retained, we often were 4th and 5th, moving around a little bit depending on the time of year in the country. And so we've maintained that position. About 5% share of visitor electronic data, electronic card spend. The other one I'd point out there is the commercial guest nights at 907,000 guest nights around the region. So that's to the end of the year, that's a 12-month figure. Around 3.5% market share, again, fairly similar to what we have used to be pre-COVID levels, 35% occupancy rate. Business events is the other one I'd point out there. This data in here, though, is only for Q3. Q4 data has not been out yet and been sent out to us. So for just 3 months of last year, we had 128 business events hosted in the region, which was 12,000 delegates. So we know that when delegates visit a region for a business event, they spend slightly more than a leisure visitor, and they often have a tendency to return and come and explore further. So we like to see those numbers nice and strong. This is for your district, this screen, for Waikato District Council area. And you have these graphs in your data pack as well. So it's just to touch base on these. Commercial accommodation, we've been sitting at 30% occupancy rate, so slightly below the national average of 37%, but fairly close to the regional overall occupancy rate, with 162,000 bed nights in a commercial accommodation. So staying an average of two nights per person per stay, which is a little bit higher than Waikato regions at 1.9. Visitor spend, therefore, Waikato district is 62 million, based again on electronic card transactions, so that doesn't account for any cash contribution or prior booking and payment online. That's a good increase of 6%. We used to celebrate larger increases than that, but 6% is worth celebrating. There are parts of our country that are still not achieving great growth at all. This screen just captures some of our activity. Again, you've got this all in your data pack as full paragraphs on each of these. While we've had very little visitation enabled domestically and borders closed, our team have remained working very hard in ensuring that Waikato region and district remains top of mind for our visitors, that when borders open, we are able to welcome our visitors in. You'll recall our Mighty Local campaign that was designed and developed during the first lockdown of 2020. We reactivated that in August. So that's to encourage residents to go out and support local businesses, buy local. And our current activity is encouraging locals to explore local. So while we're at red, some people have been a little bit hesitant to travel, but we are really safe to travel and go and explore and see our amazing experiences in our piece of the country, and to get out there and support our local hospitality. Our businesses need our locals to be supporting and spending. So that Mighty Local campaign is really encouraging that local visitation. A lot of our activity during RED has been phone calls and emails to our operators, to our experiences, touching base, how are you? And sometimes it is just a phone conversation and we're here to support you, goes a long way. Sometimes it's been helping them navigate securing some of those subsidies that were available from central government. So it's been really useful, I think, for our operators, and their feedback has been that it has been useful for us to keep touching base with them, give some guidance where we can, but just to know, for them to know that their RTO is here for them. While borders have been closed, it would be easy to think that we've not been doing very much in the international marketing space, but we have. We continue with training our travel trade. So that's agents who are offshore selling trips into New Zealand. We ensure that they are trained, so they know what we have to offer here in the mighty Waikato, and that we are still top of mind. We are also still in contact with international travel media, so that we can sell any images and pictures and stories and articles, content about the Waikato. We're making sure that that is getting coverage. The borders opening, we're very amazed that we had an earlier opening of our borders, and we are really looking forward to that. We know that it's not going to be 4th of April and then in May when our next set are available to come. It's not going to be a turning on the tap. It will be a slow trickle and a slow build. Just because the borders are open, they're not going to all turn up all in one day. So that'll give us time, and our operators, our experiences, time to gear back up, bring staff back on for board, recertify equipment, whatever it may be that they've put into hibernation, give some time to get that back up and running again. But at least we know that there's visitors about to arrive. Anecdotally, we know from some of our experiences that we've spoken to since those announcements, there's already some fairly strong trade bookings, international trip bookings for the summer season. So we're looking like things are going to hopefully rebuild nicely. We've also received, as you know, central government funding through the Strategic Tourism Asset Protection Plan and the Tourism Reset funding that was available for all RTOs. We maximised our ability there and secured the maximum amount for the mighty Waikato. That's enabled us to fast track some of our projects that had been on our to-do list from the Tourism Opportunities Plan for a little while, and it's given us some resources to be able to activate some of those, the Ambassador Program, Destination Management Plan, West Coast Journey, and so forth. So we've been really grateful to have that extra funding through to the end of this calendar year. That's all I wanted to cover, other than thank you for your ongoing support and contribution to Hamilton Waikato Tourism. Our partnership and relationship with with Waikato District Council within Hamilton Waikato Tourism is valued, and we really appreciate your input and your ongoing support of us. Hopefully that leaves plenty of time for some Q&A.
Yes, thank you, Nicola, for attending. And we do have a question. Councillor Eyre.
Thank you, Madam Chair, and thank you for that presentation, Nicola, really interesting. I just note, and apologies if I have missed it, but I do note two large Waikato events, the field days and also what's intended in September, the World Rally, don't appear to be on your radar. Have you been called in, or are you working with those organisations in any capacity?
Yes, absolutely. So field days, of course, they've moved to November. So we were, part of the stakeholder group and assisting with some of those decision making. So absolutely. And we run a field nights campaign in conjunction when field days is happening. And rally, yes, we will be. We haven't probably had enough contact with them yet, but absolutely on the radar for sure.
Great. Thank you.
Thank you.
Mrs. Moana Tufangai.
Thank you for your presentation. Thank you, Madam Chairman. Thank you for your presentation. I was just wondering about accommodation. When people come to the area, do we have enough available accommodation? My understanding was that with the housing shortage, quite a lot of our motels, hotels, especially on Ulster Street, are being used for emergency housing.
Yeah, absolutely. Accommodation has been a challenge for us for a little while, actually. It's not even just a COVID-related issue. So we're welcoming having our 3 hotels back from MIQ. We're excited about that, and that'll put some great bed nights back into our portfolio. Look, it is a challenge, and it will be ongoing for a little while, particularly at event time. Event time, we often run out of bed stock. And it's a chicken and egg. We need our bed nights so we can secure some amazing events, and then we need those amazing events to give comfort, to build more accommodation. It is an ongoing challenge. You're right.
Just when there was, sorry, Madam Chairman, but when there was the was it the field days or something, and there was a huge camper van park. Huge,
That's right.
That seemed to work really well.
It did work very well. Wasn't without its challenges being a camper van village in June. It's a little chilly for camper vanning, but they made a fantastic go of it at Claudelands there with the field days team working together. And I understand that those who stayed did really appreciate that accommodation. I'm not sure whether that's on the cards again, but it is a solution that's been used a number of times actually over the years. If we think of the Rowing World Cup, the one that was held at Karapiro, the same thing occurred then. So it is a solution that can be investigated. It has worked in last year because a lot of those camper vans were not on the road with our international visitors. So it is just securing that stock. But thank you.
Thank you. Are there any further questions? I appreciate you coming in or on not in the Zoom, in the Zoom. In the Zoom. So thank you so much, and we'll look forward to meeting you again next time.
Maybe in person next time. Thank you.
Yes, hopefully. Okay.
Have a good afternoon.
Thank you. Bye, Nicola.
Bye.
So moving now to page 238. Julie, are you on? Julie, hello. We have a report here, economic and community-led development. Over to you, Julie. You're on mute, Julie.
Thank you, Madam Chair, and through you, Madam Chair, I'd like to thank you for the opportunity to come and talk to you around our key work programmes in both economic development and the Blueprint and Community Aspirations budget programme underneath community-led development. So thank you very much. I provided as part of the report the presentation, so I won't go through it in low-level detail, but I will talk overall, and if I could have the opportunity to share that, please, Madam Chair.
Yes. Have you got access, Grace? Has she got access?
I can do it myself if you wish.
Yes, if you can.
Yeah, one moment. Can you see that okay?
No, sorry, Julie.
Okay.
Yes, it's looking like it's working now. You go.
Thank you. Thank you. So, councillors, you may recall in October of last year, you approved the discretionary funding moving into what we call the Community Aspirations and Blueprint Programme, otherwise known as the CAB budget. In November, we recruited Jason Marconi to join Leanne to help establish and lead on the community and blueprint projects across our district. As part of that, we brought with us as well our community-led development framework, which you see in front of you. So our whole purpose is to support our communities to lead and achieve their community and blueprint aspirations that they have. But wrapping around all of that is a community-led development framework, which allows our communities to build up their confidence and competence in managing projects for themselves, and also gives them the ability through governance to be able to secure additional match funding to support the programmes or projects that they're wishing to do. We have been working both internally and externally with our partners and our colleagues within council to smooth the way for some of the projects that are going to be coming on board for our communities. And already we've started to talk to at least 6 communities about their projects that they're wanting to deliver over the next few months, and possibly even longer than that, depending on what we're doing. We've already held a workshop, a community-led development workshop, and we'll continue to do that so that we're continuously building up the capabilities of our communities to take more leadership in some of the projects and aspirations that they're wanting to achieve. This presentation that I'm doing to you now forms part of what a new quarterly report will look like for you, which will show you where we're working, what community groups we're working with, and what blueprints and community aspirations have been started or achieved, so that you as our leadership have a good opportunity to see right across the district, and in particular in your own wards, the activity that's taking place. So that'll be the report that comes to you in the next quarter, so that you're fully aware of what's happening. But we do hope that if you have any questions or anything that you want to know that's going on in the community, you can engage with either myself or Jason and Leanne at any time, and we'll be able to talk to you about what's happening in the areas that you represent. So I don't know whether there's any questions, if I stop here and just ask Madam Chair through you if there's anybody who has any questions.
I'll need you to take the screen down, Julie, so I can see if someone wants to ask you a question. Thank you. Councillor Sedgwick.
Thank you, and thank you, Julie. I'm a little perplexed where Te Kauwhata is very, very active, not only with blueprint projects, but with getting them off the ground and getting additional funding for them. I'm just wondering, when you're saying needs assessment, can you just clarify what that means for me, please?
Yeah, in particular, it's whether there's anything else that's needed to happen, whether it's either funding, additional funding, whether it's that the community group themselves need other engagement taking place from other agencies. It's really about what they need to achieve what they want to achieve.
So can I assume that that will be covered with my meeting with Jason?
Yes, absolutely, without a doubt, yes.
Thank you.
Councillor Church.
Thank you, Madam Chair. Yeah, thank you. A very self-explanatory report. So thanks for that, Julie. Just making sure, because I know I just happened to have a Zoom meeting with one of the staff this week on a completely different topic, and the governance tutorials came up, and a couple of people were quite excited about going. I didn't know about it, and I'm aware, I don't think Councillor Henson did either. So just make sure if we can perhaps have us added to the email lists as key stakeholders when we have these potential events from your department come in, because we're fully behind them, and I haven't been to one of those governance workshops in the past and helped also get other people to them when we had them out the Akaka. They are very beneficial and people like to go, and I feel perhaps the one that was on last night, we missed an opportunity to get some more people there. Yeah, so just a heads up on that, just if we can be added to that. I don't think we went to the Pocono Community Committee, and it may be just a timing issue, but it may have gone to them in a separate email that us councillors delegated weren't there, but I'm not sure. But yeah, really just about that comms and communication, because we do want to promote these excellent events that you're doing. Thank you.
Okay, thank you, Councillor Church, and I apologise if that's the case. Right from the very beginning, you should all be aware of what's taking place in your communities. So I'll just check back and find out what happened there. But be assured that that will change to make sure that you are well aware that you are good promoters for us, and your wide network allows more people to be involved in what we're doing, which is what we're looking for. So apologies, and change will take place.
Thank you. Jim.
Thank you, Madam Chair. And just to clarify, as you probably know, there are over 280 blueprint initiatives across the local area, blueprints, et cetera, and some of them are council-led, and that's been, agreed and clear for a while. So a lot of those council-led ones already made it into the current LTP. So when Julie's referring to talking to the communities and conferring what are priorities for them, it's building on the check-in we did a couple of years ago with those communities, and it is in that due diligence category around those things where the community really is taking the lead. So it's not putting at risk anything that council's already started on, where the community's quite happy or sees it as appropriate for council to lead. For example, some of our CapEx work.
Thank you, Councillor Beck.
Yeah, I was just going to endorse that comment, Jim, and thank Julie for the ongoing work. I mean, this is a journey, a path, and we're actually well on the way. And this is how we put more fuel in the tank. I don't know, maybe I should be saying electrons in the battery, and keep moving forward. So actually, as much as possible, these things will make their way into our work programs with our council led. And there's also seed funding and opportunities for communities to lead there. But so yeah, really good to see this progress. Thanks, Julie.
Thank you.
Yes, I endorse that. Do you have more to say, Julie?
Not on community led, but I would like to take the opportunity to share with you around economic development and key account management, if that's okay, please, Madam Chair.
Yes, go ahead.
Is that something we can say?
No, not yet.
Okay. Still not?
No.
Okay.
There is information in our agenda, though.
Okay.
Oh, yes, it's coming now. Here you are.
Okay. Well, this is really quite important through you, Madam Chair, because just since January alone, my team, Neil Daly and Kelvin Forsman, have been dealing with up to 8 different investor inquiries into our district, both expansion and also new locations into our district. And one of the things that we'd identified last year, or one of the barriers we'd identified last year, was how we were going to manage these inquiries, because this was demand-led, not necessarily specifically going out and attracting particular sectors into the district. This was just purely based on demand. So overall, we've developed what we call a key account management framework, which allows us to focus in particular on the large developments and investors that are looking to come into our district, so that we can work with them through not only the processes within the council, but also to ensure our partners across the region are aware of what's happening in our district, so that we can gauge more support from them, in particular around maybe Kangaroora, MSD and housing developers as well. Because if I think about just the conversations we've been having since January the 10th, some of those potential investors are talking about possibly job creation of up to 800 new jobs. And the challenge around that is where the people will come from and how we ensure that we're maximising that investment through our communities benefiting from those opportunities in the first instance. So one of our biggest challenges at the moment is around some of the requirements of those businesses around the water infrastructure that sits in our space, or possibly not sit in our space. So we're currently working through that at the moment through a key account management framework, and working both internally with our colleagues who are getting great support from service delivery and waters to try and work with those big investors that are looking to come into the area. But overall, the key account management and the economic framework is really very much about us managing the caseload so that we're not surprised or shocked or not able to deliver for whatever reason, and looking at a full end-to-end process for somebody coming into our district. We want to be in a position to present options, which is really important from a perspective that at the moment we're dealing with inquiries that if we were better prepared at the front end of the business, it would mitigate some of the waste that we're having to deal with. So empowering our community, our investors, to be able to source proper information is really important as well. And then we have to look at targeted investment. If we know what some of the barriers are that we're having to work through, such as water infrastructure or what have you, then what are the sectors that we can attract to come into our area that isn't going to have that negative impact on our supply? So we've built a framework up that allows us to do that, an assessment tool. We're currently working on an investment prospectus so that we can share that with you. And just like my team in community-led development, we've now developed a new framework for reporting on the activity that takes place with both existing businesses and new investors coming into the district, so that you can again see what's happening in the district with regards to economic development and both the economic and social benefits that is driving for our communities. And again, happy to take any questions on that.
Thank you. Councillor Smith.
Just wonder if Amelia has got his ears on. Thank you. The other day, and I can't remember if it was public excluded or not, so I'm not going to say too much, but we discussed another entity that's coming to the Waikato, and there was some concern raised around that, which I didn't agree with. But the issue is the role that's just been described by Julie. Is that not similar in respect of the role that we were talking about the other day? And is this a duplication, or is Julie aware of what's going on in that other sphere? Because it seems to be a crossover. So I can't remember whether it was public excluded or whether it was, and so I don't want to, but it just seems that there might be two parallel systems here. Or, whether Lamia could help me out, please.
I was thinking, Councillor Smith, one might be at the start and one might be managing once it's already underway, but we might, maybe Tony, I'm not sure.
Sorry, through you, Madam Chair, I wonder if we pick up and respond to that query when we reach the public excluded section, just to continue that conversation.
Yes, that might be helpful. Yeah, okay, thank you. Mrs. Moana Tufangai.
Thank you. Thank you, Julie. I was just thinking about master plans, I suppose, and because you were talking a little bit about blueprint, but just thinking about perhaps it's too big, too big in the thinking, but just mindful about some Chinese cities that plan the whole city before they even build. And so with the Waikato district, the things that we want to have, or council wants to have in the Waikato district, and where we want to have them in the infrastructure that exists, is that all part of the plan?
Yes, thank you for your question. And it's part of our investment prospectus that we're currently working on. Well, we're actually due to finish soon, which is looking at businesses that we can attract and bring in. The organisations that I spoke to you about earlier are actually their inquiries coming into us without us even, talking to anybody. So we've got a number of challenges. One is about meeting demand and the expectations from those, but the other one is having a plan about where we would like to see sectors, and maybe looking at sector clustering as well, so that the like-minded businesses can work closer together. So both Neil and I come from that environment as well, where we've done sector development and sector clustering. So we're really keen on putting that together, and also identifying those sectors that we want to purposely go out and shoulder tap as opposed to just the reaction to the demand that's coming in. It's just, I mentioned the demand because it's such a large increase we've seen just since January. But no, it's a really good point. And once we have that prospectus, I'll share that with you.
Okay, thank you. I think it's really exciting. Really exciting.
Councillor Beck.
Yeah, thank you, Julie. And yeah, it is good to hear about those larger sort of initiatives. And of course, some of those don't come off, because large investors, look in a number of different locations, and there are quite a few factors that come into it. I'm just conscious of the smaller businesses, the small and medium-sized businesses, which seem to really appreciate the way in which we kept in contact and tried to be supportive through that 2020 lockdown period and the period after that. Do we have the resources, and are we able to keep in touch with those smaller businesses as well, along with the large?
We haven't had the resources at the beginning, because once Neil and Kelvin started, we were very much focusing on putting the investment prospectus together, and then obviously the key account management framework. However, we do have a number of business networks that we've been keeping in touch with, and we'll be looking to start them probably round about April or May. We've been keeping in touch with some of the smaller businesses. So like in Narrawahia, we've been out to the Durham Centre and what have you to work with those. But we haven't had the opportunity to look at a full scale network around that yet. But that is something we're working on. I think the priority has been building on the framework, Councillor Beck, because we know what's coming our way in terms of large scale inquiries as well.
Yeah, both are important. Everything is important, and that's the problem, I guess. But there is a sort of a sexiness, I suppose, around the larger scale, but knowing that a number will fall over, just how it is, or go elsewhere. And yes, I'm just conscious that we don't have the little ones slip off, because they're the ones who actually are part of our community. They're there day in, day out. They're always there,
Yeah, no, and I agree. And I think the only reason we've had the heavy investment, sorry, pardon the pun, but the heavy investment of our time and resources is to build something that wasn't there in the first place, but will make things easier for us in the future. So we've had to invest more of our time in that space. That is coming to an end now because we're moving into a new project. But in terms of our businesses, which is the backbone of our economy, then absolutely. And again, through the quarterly reporting, we'll be able to show you our connections and the business networks that we're supporting around that.
Thank you.
Thank you, Julie. I'll need to leave this here. We're running out of time, but if there are any other questions from councillors, they could contact you, Julie, directly.
Yeah, absolutely, anytime.
Thank you so much. Thank you. Can I have a mover to go into public excluded? Thanks. Councillor Church and Councillor Eyre, all in favour, raise your hands.